Okay, let's dive into this fascinating world of stock charts and see what they're really telling us. Forget all the complex formulas for just a minute. We're going to learn how to read the market's story. And believe me, it's a story written by millions of investors every single day.
You know, this question right here, this is the fundamental challenge for pretty much every investor. You can find an amazing company, one with incredible products, great leadership, but that doesn't automatically mean its stock is a good buy. Let's dig into why that is.
And this quote it gets right to the heart of it. A stock and a company, they're two totally different things. They're influenced by different forces. The company's fundamentals, yeah, they describe the business. But the charts, the technicals, they describe the stock. And when it comes to your money, timing can be everything.
So here's the bottom line. A great company can be a truly terrible investment if you buy its stock at the wrong time. Maybe after all the good news is already baked into the price. Technical analysis? Well, that's the tool that helps us figure out if now is the right time to act.
All right, let's get into our first tool in the toolbox and see how we can start to understand the language of the market. Because really, every single chart is just a picture, a visual record of the battle between buyers and sellers.
So think of support as a price floor. It's a level where buyers, we call them the bulls, they look at the stock and they think, hey, this is a bargain. And they step in with enough force to soak up all the selling pressure from the bears. And that's what stops the price from falling any further. And on the flip side, you've got resistance. You can think of this like a ceiling. As the price goes up, it hits a point where sellers think, whoa, this is getting overvalued, and they decide it's time to cash in. Their selling overwhelms the buyers, and the rally hits a wall.
These floors and ceilings, well, they lead us to the most basic concept of them all, the trend. A market is either going up, down, or sideways. And just like the old saying goes, the trend is your friend. The whole game is to try and spot a new trend early and just ride it for as long as you can.
Now, what's really interesting about this is that these patterns, they're not magic. It's not a crystal ball. They are the collective, measurable footprints of human psychology. It's all about recognizing that people, well, we tend to react in very similar ways when we're faced with similar circumstances.
Markets can't just go in a straight line forever. They get tired. Sometimes they need to catch their breath, kind of digest the recent move, and build up some energy for what's next. And this creates what we call continuation patterns. Here are a few of the classic shapes you'll see all the time. A rectangle. That's when a price just bounces sideways between a clear support and resistance. A triangle is when that range starts to get tighter and tighter, like the market is coiling up for a big move. And a flag? That's usually a short little pause after a really sharp rally. All of them are basically telling you the market's just taking a quick break before probably continuing on its way.
But what happens when the market is about to do a complete 180? When a trend is just running out of gas and getting ready to turn around? Well, that's where reversal patterns come into play.
These famous patterns are like big warning signs that a trend is probably ending. A head and shoulders, or a double top, which kind of looks like a big letter M, they often show up at the very peak of an uptrend. It's a signal that the buyers are just exhausted. On the other hand, a double bottom, which looks like a W, often happens after a long slide down and suggests the sellers are finally running out of steam.
The difference is actually pretty simple if you think about it like this. A continuation pattern, that's just a rest stop on the highway, a chance for the market to refuel. But a reversal pattern, that's a U-turn. The old journey is over, and we're heading in a whole new direction.
Okay, so we can see shapes on a screen. Big deal, right? How does that actually help us make decisions? Well, this isn't about being certain about the future. It's about learning to think in probabilities and putting the odds in your favor. And one of the coolest things about these patterns is that they're often measurable. The height of a pattern can actually be used to project a potential price target once the stock breaks out. This is how we turn a simple chart into a real, tangible plan.
It's really just a simple three-step process. First, you spot a clear pattern, like this rectangle. Second, you measure its height, the distance from the floor to the ceiling. And finally, you take that same distance and project it upward from the point where the price breaks out. And just like that, you have an objective estimate for how much you could potentially make. Now, I really want you to let this one sink in because it's so important. Success in the market is not about being right every single time. That's impossible. It's about making more on your winners than you lose on your losers.
And that right there gets to the real goal of technical analysis. It is not a crystal ball. It's a risk management tool.
It gives you a clear plan and helps you to find the exact point where your idea is proven wrong so you can get out of a bad trade quickly and protect your money.
This old piece of wisdom is the real secret to long-term success. By using these chart patterns to set your exit points, you can mechanically cut your losses short. And by using them to set targets, you give your winning trades room to run. I'm telling you, 4 big wins can easily wipe out 6 small losses. So ultimately, what this whole thing shows us is that technical analysis works on a very simple idea. Market movements aren't random. They are the result of predictable, repeatable patterns of human nature. The numbers and the charts we've been looking at, they're just a reflection of our collective hope, our fear, and our greed. The real question is, can you learn to read the story they're telling?